So there's some money habits that we tend to form either at a conscious level or a subconscious level, meaning we're not really aware of what we're doing with our money. And I get asked this question probably at the top of the list, apart from Irv, what the heck are you drinking? Which, by the way, if you're wondering, this is just some Bustelo coffee, a little bit of almond milk, and maybe 2 tablespoons of brown sugar. So there's your dose for the day. One of the most common questions that I get asked is, how do I manage my money? And when did I have that turning point for the way that I saw money and the way that I handle my money? If you find value in this content, just consider paying it forward and sharing it with someone else that you know struggles with the way that they handle their money and what they should be doing with it. So the first thing that I got really clear on is probably a no-brainer for a lot of you, but it really was a moment of awakening, an aha moment for me, and that's how much money is coming in. And I know that that probably sounds a lot easier, and that's probably not the biggest turning point for you personally, but hear me when I say this. If you don't know how much money's coming in, then it's going to be a lot harder to track what's going out. And the reason for that is because if $3,000 is coming out, and that might not seem like a lot of money to you if maybe you're someone that makes 7, 8, 9, even 10 grand a month. Well, guess what's happening if 3 grand goes out and only 3.5 or 3,500 is coming in? That means that you're barely breaking even every single month, and that means that you barely have $500 to your name before we talk about taxes, before we talk about emergency funds, before we talk about savings or anything of that nature. So first things first that I got really clear on is how much is coming in. And this gets a little trickier, especially as you have multiple sources of income. Now, it's maybe a little bit easier for you if maybe you just have a 9-to-5, or if maybe it's you and your spouse and you guys do your bills together and you guys kind of manage your income together. Then maybe that's a little bit trickier, because now you kind of have to see what their hours are like. Do they have some type of raise? Are they taking some type of pay cuts? Are you guys moving to another area? These are all little things that you want to consider, especially as you're looking at your salary. Now, for those of us that are business owners, this can get tricky if maybe you have accounts receivable set up on one side, and maybe you have, and maybe you do social media marketing. So maybe you have your social media marketing outlet on one side for the income that you're generating, but then you also have your consultation services, but then you also have maybe some digital products that you sold. You want to make sure that you have, maybe put it on an Excel spreadsheet, or maybe a QuickBooks app if maybe you just want to have it all in front of you right there, or even if you wanted to go a bit more, what I can say, mainstream with the Every Dollar app, which is the Dave Ramsey app, which is a fantastic app in my opinion. It just kind of streamlines everything. That way you can see where everything is coming from and how much you have coming in every single month. The second thing that I got really clear on with my money was, what am I saving for? Which is something that I really want to put in front of you, is ask yourself, what are you saving for? Are you saving to possibly throw some more money back into your business if you're doing marketing? Are you saving to purchase your first home? Are you saving to purchase your first investment property? Are you saving to put your kids through college? Are you saving to maybe open up and turn that side business or turn that side hustle into a full-time business that's going to generate you the income that you need to maybe get out of your full-time job? Find out what you're saving for. Give that money an assignment, because I can assure you that if you don't give that money an assignment, it's going to find what I can call a far better master that's going to give it a job and give it an objective that money is going to have its own mind, and it's going to run to where it feels that it needs to be used the best. And oftentimes, if we give money its own objective, it's going to find the least possible way for it to have babies. I'm trying to find a way for money to have babies. Hold on to it long enough to the point where money gets pregnant, and then I have that money having family members that now works for me, rather than having my family members work for it. Now, speaking of giving money an assignment, rule number 3 that I gave myself is I wanted to put my money and put my finances in what I call a financial audit. Now, what started off as doing it once a month became once a week, has now become once a day. Now, if you want to be methodical about this, and if you want to be fanatical about your money, knowing where your money is going, what it's doing at any given moment, I would suggest that you pick a time. It doesn't matter if it's first thing in the morning. It doesn't matter if it's during lunch. It doesn't matter if it's before bed. Preferably do it at a time that if you maybe don't handle seeing your money, what I can see, I see a decrease in your finances. Try to pick a time where it's not going to intervene with, let's say, if you have an important call, or it's not going to intervene if it's maybe going to put you in a downward spiral or in a downward state. So pick a time, whatever that is. It's different for all of us. I like to do it sometime during lunch. Once I've handled some of my more difficult tasks during the day, I'm a little bit on downtime during lunch, or if, let's say, if I'm having a cup of coffee, and I like to see what are my investments looking like in that morning. What's my crypto account looking like? Should I be adding? Should I be getting out of certain positions with some of my picks in my portfolio? I don't do a lot of stock trading, but if maybe there's something that I feel that I need to add more to, so let's say if there's a dip in the S&P 500 and I want to take advantage of that, then you can best believe that I'm going to be adding to that account. So I use M1 Finance. But let's say if you wanted to take a look at the audit wise, and you wanted to take a look at how much money came in that month, how much, or that day, how much money left that day, then this would be a really good exercise. Again, it could be once a day, it could be once a week, and it could be once a month at the bare minimum. And one really important thing that this exercise is going to do is that it's going to help you see where your money isn't just headed, but where your money shouldn't be headed. So you'll start to find out, okay, why am I still paying for this subscription? Or you'll start to see, why am I still paying for this service if I'm no longer using it? And you'll start to realize, okay, I can save $200 here, save $100 here, I can save $50 there. By the time you look back, you're maybe saving $2,000, $3,000, even $4,000 off of your business top line just by cutting services that you no longer use. And then on the personal side, you're maybe cutting an extra couple $100, especially if, again, it's a service or some type of product that you just find no use for, that you could be using that for your next thing. And that's going to be automating your investments. Now, you want to make sure that you automate your investments into something that you understand. Now, I'm not going to make this video about the type of investments that you need to make, but let's say if you wanted to automate your Roth IRA, or if you wanted to automate your 401k with maybe an employer match, or if maybe you wanted to automate buying books for yourself, whatever that investing looks like for you. Remember, it doesn't just need to be in the stock market. It doesn't just need to be in real estate. It can be something that you have an understanding about. So if part of that is maybe investing in self-care, or investing in self-knowledge, or investing again in the S&P 500, an ETF, you can go ahead and automate that. One thing that I like to live by, if it's out of sight, it's out of mind. And so I think that a big mistake that especially I made early on was, I'll get to it later. And you know, us, we're humans of, we're creatures of habit, us humans. And so if we give ourselves the option of getting to it later, well, guess what? That later becomes tomorrow, that tomorrow becomes next week, and that next week becomes never. So one thing that I've noticed is that if I automate it, let's say 10% of whatever comes in that month. So if I had a really good month and we had, let's say, a $10,000 month, or a $50,000 month, or a $100,000 month, right? Whatever that number is for you, or if maybe you had a bonus at your job, 10% of that, 20% of that, whatever that ratio is. And then if you wanted to get really aggressive, you can even do 30 or 40%. Now, I know that if you're watching this and you're thinking, who the heck can invest 30 to 40% of their income? A select few of us can. And the reason for that is because, let's say if you're living well below your means, all of your bills are caught up for, and you just have the excess of income, and you're running a really streamlined and lean operation, then you can go ahead and do so. But for the majority of us that maybe have jobs, then I would hover right around that 10 to 15% of my income every single month. Now, the fifth and final place that I really started watching my money in was taxes, especially when I was working for the man, or at least at a corporate job, right? You want to see what type of tax bracket you're in, but you also want to see what withholding, what's your withholding amount that your employer has. You can go ahead and figure that out by contacting your human resources, and they can go ahead and let you know. And then that way you can go ahead and adjust. Just make sure, and again, this isn't any type of tax advice, but make sure that you speak to your tax advisor, because this could have some tax implications where you could end up owing by the end of the year if you adjust those numbers a little bit too much. Now that we are on the other side of the board, if I wanted to speak to, let's say, some of my entrepreneurs, you know that when it comes to taxes, unlike when we were employees, we're not taxed on what we make, we're taxed on what we have left. So one of the fastest ways that I could find myself saving money wasn't so much just trying to generate more money, but rather how can I lower my tax bill at the end of the year through tax write-offs, through tax deductions, and through just different money vehicles that I can use to, again, legally shelter the amount of money that I have to pay Uncle Sam. Because one of the biggest advantages that we have as business owners is that we can go ahead and write off possibly the vehicles that we use, the transportation, the mileage, the meals, the travel, the marketing, the expenses, even if we have some type of workers that are assisting us, all that type of gig work, we can write that off, and then we can go ahead and get taxed on the amount that's left. So if you had a $200,000 a month, you're not getting taxed on the $200,000. You're getting taxed on what's being reported after the expenses, which when I figured that out, that was a huge deal breaker for me and just a huge aha moment in my business of how I can help raise my income without necessarily having to make more money, which it's a pretty cool trick once you know how that game works. So there you have it. If you found value in this content, consider hitting the subscribe button down below. Join the official community. Don't forget that anytime I'm not posting on here, I'm posting over on the Inside with Irv show, which is my podcast style channel. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking me out. Till next time, everyone, I will see you in the next video.